Welcome back. My name is Bill Cannon, Head of Portfolio Management here at Valkyrie. Here is this week's macro summary. The question many ask is if there will be a recession. I think after the latest string of data, the question changes to when and for how long. Last week's consumer price index was released at a year-over-year level of 8.6%, higher from 8.3% last month, the highest level since the early 1980s. This surprised investors. Not only many thought CPI was slowing down or plateauing, but exposed to the possible magnitude inflation has risen so far, with the small attempts by the Fed to control. Core CPI, which excludes energy and food, improved slightly to 6% from 6.2%, but the general month-over-month CPI reading rose to 1% from 0.3% last month. The Fed investors could be experiencing a little more turbulence ahead as persistent inflationary indications prompt faster and more aggressive response from the Fed. What seemed like only two 50 basis point hikes planned for June and July have now spilled over to a more probable 3rd of September so far, with questions if 50 basis points is enough to make a dent in curbing inflation readings. The FOMC meets this week with their decision due Wednesday afternoon. Markets opened Monday in correction territory with the S&P 500 index trading around the 3,800 level, a little over 20% down for the year. The tech-heavy Nasdaq Composite is also down, over 30% down for the year, trading below the 11,000 level. As expected, the yield curve exploded with rates moving higher after the CPI release. The 10-year Treasury yield crossed over the 3.3% level, which was last reached mid-2011. The front end of the curve rose notably with the 2-year yield at 3.24% Monday morning. The 2-10 Treasury yield spread declined to almost even by the end of last week, a move down from positive 30 basis points early in the week, but has since bounced to about positive 10% now midday Monday. Crude oil futures traded in a tight range last week from $120 to $124 a barrel. Normal summer demand can make vacation travel a little higher than usual. The Fed will have one more data point with the Producers Price Index released Tuesday. Expected year-over-year PPI is coming in at 10.8%, slightly lower than the 11% printed last month. Following Wednesday's Fed decision, Thursday's releases include initial jobless claims, currently expected to be 217,000, down from last week's 229,000, which was higher than the week before. These levels are still at historical lows and could help measure the economy's employment picture. As markets continue to ride out the storm, Valkyrie will continue to provide the direction you need. See you guys next week.